Recessions don't actually destroy wealth, they transfer it. Right now, a hidden pipeline is moving billions of dollars from the pockets of the panicked into the hands of the prepared. Have you ever noticed that when the economy gets worse, most people lose their jobs and their peace of mind, but a few people quietly get richer than ever? That is not luck, that is architecture. Imagine a room full of things you've always wanted, like houses, stocks, and profitable businesses. Suddenly, people stop buying, not because the things became useless, but because people became scared. A recession is not when value disappears, it is when fear replaces logic. When the world runs away from the market, the patient person walks in and buys the future at a discount. Think about two different people, Ravi and Mr. Mehta. Ravi earns a great salary, but he lives month to month and has no margin for error. When the recession hits and his company cuts his pay, he isn't thinking about wealth, he's thinking about survival. Because he has no savings, he's forced to sell his investments just to pay the bills. Then there's Mr. Mehta, who was boring for years while everyone else was flaunting luxury. He was stacking cash, or what professionals call dry powder. When the recession comes, Mr. Mehta becomes dangerous because he has cash when others are desperate. He doesn't make money during a recession, he buys money by acquiring future value at today's panic price. In 2008, while families were losing their homes, institutional investors didn't panic, they stepped into the vacuum. One investment firm quietly bought over 40,000 properties at auction prices. They didn't fix the economy, they simply understood that panic creates forced sellers, and forced sellers create discounts. By 2015, those same houses were worth triple, not because the bricks changed, but because the panic ended and they owned the supply. A recession is a filter that separates those who only earn from those who actually own. Earners are fragile because their income depends on calm times, but owners are built for chaos. The rich love recessions because they know fear sells faster than logic. When everyone else is emotional, they stay calm. When everyone else is selling, they are buying. They aren't chasing excitement, they are waiting for fear. Money moves from careless hands to prepared hands, and from emotional people to patient people. So the real question is not whether a recession will happen, but whether you will be scared or ready when it does. In every recession, one group loses sleep while another group buys assets. The difference between those two groups is often the difference between staying poor and becoming wealthy. Drop a comment with one asset you would quietly accumulate if prices dropped 30% tomorrow. I'll break down the most strategic answers in the next video, because next time fear hits, you need to know exactly where to look.